Hi there, welcome to Kneppy Invest. It's not often you see a company increase their quarter receipts by 7,200% in 1 year. But Telix Pharmaceuticals did exactly that. Now, you might argue, well, it's on a low base, but that low base was $1 million. In fact, it was 990,000, which means in the most recent quarter, this company produced $72 million in receipts. So in 1 year, Telix Pharmaceuticals have increased their quarter receipts from just under $1 million to $72 million. So we get a sort of an idea on why the market gives this company a market cap of over $2 billion. So let's have a look at Telix Pharmaceuticals and try to understand why the market absolutely loves this company. To truly understand something, it needs a lot of work. And I have gone through what Telix Pharmaceuticals actually do quite a few times, and it's still yet to totally sink in. But I'm gaining a better understanding of what this company does because I am no expert when it comes to drugs and pharmaceuticals and stuff that Telix Pharmaceuticals do. But I want to understand. It is very important. I don't like that investing philosophy that says you should just invest in stuff you understand, because I do think you possibly will sell yourself short in the long run. So let's try to understand what Telix Pharmaceuticals actually do. They're all about MTR therapeutics, which is molecularly targeted radiation. And it's all about finding the cancer cells using a targeting agent. And usually those cancer cells have a signature that only belongs to them. And so that targeting agent can find those cancer cells. And then it attaches itself, that targeting agent, to those cancer cells. Now, this targeting agent is applied or administered through like a needle, that sort of thing. And what it does, or what uses it has, is in imaging and therapy. So right now, this massive increase in receipts that the company has seen over the past year is through the imaging. We haven't touched, or they haven't touched upon therapy just yet. And some of the advantages of MTR therapeutics, I'll just quote this. So most targeted therapies only kill a subset of cancer cells in the tumor microenvironment. MTR therapies are designed to destroy the tumor target plus adjacent tumor and supportive cells. This is called the bystander effect. And Telix Pharmaceuticals have a lot going on. So this is their core pipeline, just their core pipeline, not the complete pipeline in oncology and rare diseases. So they are targeting 4 particular cancers: prostate, kidney, brain, and BMC, which is bone marrow conditioning. And right now, this increase, or this massive increase in receipts, is in their product called Illuccix, which is all about prostate imaging, no therapy. But they also have quite a few products in phase 3 in kidney and also in therapy for prostate. They have phase 3 trial there as well, and also in bone marrow conditioning. So this company has a lot going on, and this massive increase in receipts is one of the reasons why I'm excited about this company, because if they have seen this increase in receipts for this one product, Illuccix, what's going to happen when a few of their other products come online in the future? And I probably also should mention that the company right now has over 20 clinical trials underway, including collaborative investigator-initiated studies. So again, this company has a lot going on right now. Now let's try to understand what some of the products this company is now selling and producing some revenue or cash receipts, what they actually do, including Illuccix, which is a preparation for imaging prostate cancer with position emission tomography, PET. It enables rapid radio labeling at room temperature with high radiochemical purity and production consistency suited to commercial and hospital radiopharmacy setting. So all that went completely over my head. The main thing here is the rapid increase in receipts. So whatever Lucid's doing, it's highly successful in doing what probably Telix Pharmaceuticals wants it to do, or maybe Telix Pharmaceuticals is a really good marketing company. Now to some few facts in regards to Telix Pharmaceuticals. Company only founded in 2015, so about 8 years old, by Christian Behrenbruch and Andreas Kluge. And Christian Behrenbruch is currently the CEO of this company. He has 7.3% ownership of Telix, while Andreas Kluge has about 7.2%. This company listed on the ASX on the 15th of November 2017, and the share price has increased significantly since then. At a current share price of $7.07, and I am recording this video on January the 24th, and more than likely we'll release this video probably either the January the 26th or January the 27th. So have a close look at the share price, because the share price has been quite volatile over the past year. But at a share price of $7.07, this company has a market cap of $2.2 billion. And I'm pretty sure that 1 year ago, the market cap was fairly similar to 2.2 billion. There would have been a lot of people out there confused on how this company had such a high market cap when it only produced $990,000 of cash receipts in 1 quarter. So hopefully you can understand now why the market is excited about this company, because of this massive increase in receipts in the 1 year. And the ticker for this company could be anything else but TLX. Now let's have a look at this astonishing increase in receipts in the past year for Telix Pharmaceuticals. Let's go back 1 year ago to look at the December quarter in financial year 21. I think this is the last quarter of their financial year, because their financial year is the same as the calendar year. So this is the last quarter of financial year 21. Receipts to customers, $990,000. And this company was spending a lot of money. $7 million on research and development, $2.3 million on product manufacturing and operating costs, $1.8 million in advertising and marketing. So if they are doing a good job at marketing, they're getting really good value out of that $1.8 million. Staff costs, $6 million, and administration and corporate costs of $4.9 million. So this company was burning through a lot of cash. In fact, in this particular quarter, they burned through $21 million of cash. And in the year, financial year 21, they burned through almost $60 million of cash. And at the end of this particular quarter, they only had $22 million of cash. So more than likely, there might have been some nervous people out there who might have been expecting a capital raising from this company. But things are completely different now. So let's have a look at the most recent quarter to see why I'm excited about this company and why I think this is one of the best growth, or potential best growth companies on the ASX. Receipts from customers in this 1 quarter, $72.2 million. In the 12 months to date, or the year to date, $124 million of cash. So that means in the first 3 quarters of this year, only $52 million. So a significant increase in receipts in the past year, and receipts are still climbing. Now, the company has also increased their spending, which is understandable enough with this massive increase in receipts. Research and development up to $19 million. Product manufacturing and operating costs up to $30.5 million. Advertising and marketing only $2.8 million. So not spending a lot of money on that. Staff costs up to $10.7 million, and administration and corporate costs up to $5 million. They also paid $2.3 million in income tax, and there was $91,000 in interest. But even though they paid that $2.3 million in income tax, the company was still operating cash flow positive by $1.6 million. So if you take away that income tax paid, they were operating cash flow positive by almost $3.8 million. In fact, over $3.8 million. Now, they did spend $3 million on capital expenditure, also $973,000 on acquisition, but received $1.4 million through exercise of options, and also borrowed $2.5 million, which means the cash on hand actually dropped insignificantly, only $800,000. And at the end of the particular quarter, they had $116.3 million cash. And you'll notice the cash on hand is significantly higher at the end of this financial year than it was last financial year, and that was because of a significant capital raising. Now onto the receipts history of the company, and this is probably the most impressive cash receipts history or growth I have seen on the ASX, maybe ever. When I say ever, I'm talking about the last 12 or 13 years. So receipts went from almost nothing, just around $1 million, up to $5.4 million in the June quarter, up to $44.5 million in the September quarter, and now $72.2 million in the December quarter. So you might argue, if you're a bear, that the increase in receipts from the September quarter to the most recent quarter was actually less than the increase in receipts from the June quarter to the September quarter. So instead of increasing by $39 million, receipts only increased by, was it $28 million? So that could be a bearish side, that the growth in receipts is starting to slow down, but that would be a silly assumption to make because it's only been really one quarter. So it's really interesting. It's going to be really interesting to see how much receipts they have in the current quarter. But again, if the company can sort of slow down their spending, particularly in those administration and staff costs, this company could be highly operating cash flow and highly free cash flow positive in the current quarter. Now onto the chart for Telix Pharmaceuticals, and this is around about a 13-month chart. No uptrend in the share price during this period, a lot of volatility. So if you do want to wait for the share price to drop, you might be in luck in the future, because we have seen the share price increase to as high as $8.80. That was back in January of 2022, and then dropped to a low of $3.60 in May of last year, and then rally back up to $8.20, and then fall back to $4.40, and then it has risen again up to around about $7. So a lot of volatility in the share price. And I think one of the reasons there is a lot of volatility in the share price is because of the valuation. $2.2 billion valuation for this company. There's going to be a lot of investors out there who would find it hard to justify that sort of valuation, because a lot of investors will probably do some sort of DCF, and it would be almost impossible to do a DCF on this company. How can you project the future cash flows for this type of company because of the rapid growth in cash receipts? So I think you're going to see a lot of volatility moving forward for this company. But if the company can show that they are highly operating cash flow and highly free cash flow positive, as I've mentioned in the past, I think the share price could run up from that point in time. So at this point in time, I do have a position in this company, and I will add to my position if I see some proof that the company has some scale and the company is going to be generating a massive amount of cash in the future. And that's all I have for this video on Telix Pharmaceuticals, a massive increase in receipts of 7,200% from the December quarter in financial year 21 to the December quarter in financial year 22, a 1 year period where this company grew receipts from just less than $1 million to $72 million. The market is in love with this company to a certain extent, with a valuation of $2.2 billion. So if you have any thoughts about this company, if you think the valuation is absolutely absurd for a company that is yet to be profitable, I'd love to hear your opinion. So leave your opinion in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.